Hello traders, the title of this video is Discover a Simple Candlestick Technical Analysis. Discover a simple candlestick technical analysis. All right? In this tutorial, I want to reveal to you a very simple but powerful, candlestick technical analysis. All right. Instead of using the candlestick pattern, we're going to use the range of the candlestick. So if you are TSTW24 or as usual a trader, I invite you to watch the full length for this video because what I'm about to share today is new. I have never shared it before. So it's something a little bit different to what we were doing as a TST traders, highlighting the high, the low, and the median line. But the way we're going to use it is going to be a little bit different. So I invite you to discover this simple candlestick technical analysis. All right. So if you are a swing trader or even a day trader or position trader, if you can see the yearly chart, I will recommend that you use the yearly chart for this strategy. However, before you run away, you can apply this strategy, this candlestick technical analysis on, any higher time frame. I will prefer daily charts, all right, weekly charts, monthly chart, quarterly chart, before you will switch to your lower time frame. So even if you are a scalper or a day trader, you can apply this strategy to find what I'm going to show you now, even on the 2-hour time frame, on the hourly time frame, before you switch to your 3-minute or 1-minute time frame to trade. So very important. Let's get started. So you can see that I'm on the yearly chart now. And all we need to do is to highlight the high. You see this year candlestick bar is this one here. All right. So when a candlestick bar is closed, all right. So here in 2015, this candlestick bar is closed. All right. So when a candlestick bar is closed, either on a daily chart, 2-hour time frame, hourly time frame, any time frame, highlight the high, the low, and the median line. As you can see for 2015, I highlight the high in orange, the low also in orange, and the median line is the red line here. That's the median line of 2015. But you need to choose another candlestick bar, after that. So the second candlestick bar. For instance, if I change my time frame, if I explain it to you, let's go to the hourly time frame. Here we are. These are so tiny candlestick bars, so I don't want to use them because they are not, if the candlestick bars are too small, they are not useful for us. We want long candlestick bars, So let's go to the 4-hour time frame. We want the candlestick bar to be a little bit bigger, all right? So suppose you were here, all right? Suppose you were here, all right? You were right here, and this candlestick bar is closed on the 4-hour time frame, all right? Or let's use instead the daily chart. That would be better. So daily candlestick bar. So suppose you are here, this place, and this candlestick bar is closed. You will highlight, the high of that candlestick bar. You will also highlight the low of that candlestick bar. Attention please. And you will also highlight the median line of that candlestick bar on the daily chart. But you will drop down below again. When this candlestick bar is closed, you drop down again and you do exactly the same thing for the second candlestick bar below it. That's the first candlestick bar below this one. So suppose you are here and now we are trading and we see this tall candlestick bar is closed. We do the high, the low, and the median line. Good. And then the candlestick bar that is right below it, we do exactly the same thing. All right. The high, the low, all right, and the median line. Pay attention carefully to what we are doing here, all right, because I want you to understand it clearly. Right here, now we have it. Now, we have those lines. So then we leave them on the chart. All right, we leave them on the chart. All right. So And we want to trade around those key levels. All right, but you will see soon when I'm going a little bit deeper, you will see what I meant by all this blah blah blah. So you need 2 consecutive candlestick bar. So the first one is closed. You do that quickly, all right, like this, and then you do it exactly for the next candlestick bar right below it. And all you need to do now, because on a daily chart you want to day trade, you can see that we can leave those lines like I did now on the daily chart. We can leave them on our chart, and next week we can trade around those key levels. But I would prefer that if you can use the weekly chart, a monthly chart, even a yearly chart, that will be most reliable, especially the yearly chart. A key levels that we are highlighting like this. But you need always, remember, always the last 2 candlestick bar that are closed. Very important. Last 2 candlestick bar that are closed. Very, very, not 1, 2. All right, the last 2 candlestick bar that are closed. And let's get started. So I explain it to you now. So that's what I've done on the yearly chart. Okay, so let's go back to the yearly chart. So 2015, especially if you are day trading, swing trading, at the beginning of the year, like a new year is starting, do this. So if you do it for 2 consecutive candlestick bar, like you see here, 2015. So next year we'll be doing it for 2016 and 2015. All right, that's what we'll use. Those 2 candlestick bar, the highlight, the high, the low, and the median line of the last 2 candlestick bar, okay? At the end of December 2016, that's exactly what we'll do. And then we just leave those lines on our chart. We don't want to remove them. Now you understand why I don't move my line. And what we are looking for is for trading setup to take place around one of those key levels. So as you can see, the high, the low, and the median of 2015. The median of 2015 is the red line, okay? And we do exactly the same thing for the candlestick bar below it, which is 2014. The high is in green, the low is also in green, but the median line is in pink. All right? So now, let's go. I will show you something now. And we leave it on the chart the whole year, all right? So let's go to the hourly time frame, and you will see something very interesting happening there. Those are the lines, you see them, all right? You see now? Those are the lines. The red line is the median of 2015. The pink line is the median of 2014. All right? So now here we are. Look here on the hourly, regional. Okay, you see? We are on the hourly time frame. Okay, let's go. You can see that the price acknowledge the orange line here, forming a double bottom here. Rally up to that point here. You can see? All right? Rally up to the green one here. All right. Here you see, he ran fast, gap up. Look, it's now near the green line. And all we are trying to do is to make excellent trading decision around those key levels. All right. Are you getting it now? All right. So as you can see now, if we go, for instance, let's switch time frame. Let's go to the daily time frame. Here we are. Okay, on the daily time frame, you see the price. Look how the price is. This is the median line of 2014. All right. So here a low, a low, a low, another low. Here it is. It's happening all the time. In fact, the price was consolidating. You see. Between the level of 434, the green line, all right, you see, it was consolidating between those lines here. Look at that on the daily chart for a swing trader. Look at that. It's a beautiful trading style. These are double bottom, triple bottom, another bottom, and people are just buying near the level of 353, which is the median line of 2014. All right. But because the first thing that we want to find is a high probability trading setup, and those high probability trading setup will take place around those key levels, especially those key levels from the yearly chart. All right, and also the surge in trading volume usually occur around those key levels because the professional traders are buying at a specific price at around those key levels. All right, so you see now the reaction of the price. So now it's here, it's a resistance zone. So what is happening here for this stock? Regeneron Pharmaceutical, EPIC REGN okay, Romeo Eco Golf November. This is an American stock, okay, pharmaceutical in the this is a biotechnology sector. And you can see that it's consolidating. All right, people will try to sell it again and try to push it down. And the media line is corresponding to this, okay, orange line here. Can you see that? Okay, let's see another stock. Okay, another stock I'll show you now. This is Checkpoint Software Technology in another American stock. The APK is CHKP, all right, Charlie Hotel Kilo Papa. And again, I've done my homework. I think I've done it already on the yearly chart. Let's go there. Here it is. I've done it already. You can see the reason why I did not. You can see that. Okay, this is this year. Okay, let's zoom into it a bit. Bring it up a bit. You see here. So you can see this is the candlestick bar for 2015. All right, this is. All right, you see now, okay? And this is the candlestick bar for 2014. But you can see that I did not draw the line for 2014 because that candlestick bar is almost, all right, in the range of 2015. So when you see like this, that the second candlestick bar is still within the range of the first one, do not bother to draw, okay, the line for the second one. You see this one here. I did not draw the high, the low, and the median because it's already in the range of the first candlestick bar because we need two candlestick bar. This is the first one, 2015. This is 2014. But in this case, contrary to the Regeneron, the 2014 candlestick bar happens to be completely in the range of 2015. Therefore, I'm not going personally, I won't bother to draw the line for 2014. Okay? Or it makes sense? So, in this scenario, if you have a scenario like this, where, okay, the second candlestick bar is completely in the range of the first candlestick bar, you need to remember to apply market geometry. All right? Which means, if the price manage to come out of the range, this range will measure, okay, the width of that channel and we will project it upside here. If it goes up, we project that channel here and we'll do exactly the same thing. We'll highlight again a media line of that new channel because we want to trade around those levels. If it goes below the range of that channel, all right, we'll project it again using market geometry, okay, right here again, all right, and we will not forget, okay, the media line. Are you getting it now? Are you getting it now? All right. This is advanced trading. So if you are a new trader, you want to learn it properly, all right, and apply it properly, okay? Well, because a lot of new traders are still stuck with technical indicators, all right? But now we are just using the price action, the candlestick pattern, okay, high, low, and median line of two consecutive candlestick bar. Very important. All right, you see that? So let's go now to the daily chart. Let's see how the reaction of the price around those key levels. All right. Here we are, my friend. Can you see? You see, that's the median line. See the reaction? A low, you see here, is deep below. Now we have a triple bottom around in the vicinity of that. Okay. This is what you are looking. Look for bullish chart pattern, bearish chart pattern. All right. Observe, monitor the reaction of the price, dissect what's going on. Here, this is a good one again. All right. We have, okay, an inverted head and shoulder chart pattern in the vicinity of that key level. All right. Okay, this is what we are looking for. And then what we need to do, once we find a trading setup, we want to apply a top-down trading method to trade it without violating, okay, the trading triangle. All right, right now, this stock, the Checkpoint Software Technology, is consolidating between a level of 8865 and 7681. So they are selling at the top and they are buying here. All right, here it is high heading again towards the 8866. Okay, all right. You get it now? All right, so there's one more. Have I done this one? Yes, I've done this one. Okay, here again, if we go to the yearly chart, this is what we are talking about. On the yearly chart, this is another scenario. You can see that I've done it for 2015, the high, the low, and the media line right there. But you can see that the second candlestick, 2014, is almost within the range of the first one. Therefore, I did not bother to draw the line for that second candlestick bar. But as you can see, the price now below, you can see, it's below the channel. So this is the time where you must use, okay, a multi-talented skill, okay, applying, okay, combining the candlestick technical analysis with the market geometry, all right, the projection of the channel. So now it came out of the channel, you can see. So at this point in time, here we are, we put it there, we draw the line here, and we draw also the media line. All right, so this is our new channel that we are watching now because the price is out of the first channel. So I'm going to color it now into red, okay, red channel, okay, with orange media line, okay. Okay, all right. If the price went above, okay, the first channel, okay, we will project it like this, okay, and they do exactly the same thing. And now let's go to the. By the way, this company is called Liberty Global Incorporation. All right. The EPIC is this is an American stock again, LBTYA. All right. Lima Bravo Tango Yankee Alpha. And if we go to the daily chart, all right, here we are. Okay, here you do not want to violate the market pattern. You can see that is under a bearish pressure. Okay, you can see that's under a bearish pressure. So all you want to do, see here, this is a good one near this level, retesting, okay, coming on the edge. Here it is on the edge, all right. Anytime you see two lines like this, try to see where is the middle line. See the middle line always. All right, between the red and the orange, there is always, okay, a media line. Here it is the intersection point. Boom. These are very good place to buy or to sell on the edge. All right. You see now? Okay. Will that be helpful for you? Okay. So if we drop it down again, we'll project the channel one more time. As long as coming out of our new channel, we project it anytime it's going down. We can apply this strategy on a weekly chart, daily chart, and then we leave the line on our chart, all right? If the price out of the channel, we project it up. We project it until we have a new candlestick bar that is closed on our trading setup time frame. Okay, so for me personally here, as I'm using the yearly chart, I'll keep projecting the channel if the price out of the channel until that yearly candlestick bar is closed and a new one is beginning. Then I will apply it again. I will apply that same strategy to the last two candlestick bar. Okay, as always, you learn something new. Please try to use a demo account. Practice before going live. This is advanced trading, okay, using a simple candlestick technical analysis. Okay, I hope you have found this also useful, okay, and will help you to improve, okay, your day trading, swing trading, and position trading. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders talking about discover a simple candlestick technical analysis. Happy trading to you all, and speak to you soon.